Hey everyone, and welcome. If you're an exporter in India, you know that cash flow is everything. So today, we're going to unpack a seriously powerful tool designed to protect it, the GST Letter of Undertaking, or LUT. We're going to break down what it is, how it works, and most importantly, how you can use it to really free up your working capital. Let's jump in.
So let me ask you something. As an exporter, does it ever feel like your own money is just stuck? Tied up in tax paperwork while you're waiting for refunds? Well, you are definitely not alone. And that exact frustration is why the Letter of Undertaking was created. It's a direct solution to that problem.
And this slide right here says it all. On the left, you've got the old way, the painful way. You pay the IGST, then you export your goods, and then you're stuck in this limbo, just waiting for your own money back. But look at the right side. With an LUT, you completely flip that process. You file the letter, you export your goods, and this is the magic part, no IGST is paid up front. Your cash stays in your business where it belongs.
So here's our game plan for today. We're going to start with what an LUT is and who can file one. Then I'll walk you step by step through the online process. We'll also cover what happens after you've filed and wrap up with a few key rules you absolutely need to remember.
All right, first things first. What exactly is this document? What is this key that unlocks your ability to export without paying IGST up front?
You know, the easiest way to think about it is as a formal promise. You're basically going on the GST portal and telling the government, hey, I promise to meet all the requirements for exporting. And in return for that promise, they say, great, you can go ahead and make these zero-rated supplies, like your exports, without having to pay us IGST first. It's a total game changer. So what exactly counts as a zero-rated supply? Well, it's pretty straightforward. It covers three main things. First, the obvious one, exporting goods, sending handicrafts to a buyer in the USA. Second, exporting services. Maybe you're a graphic designer doing work for a client in the UK. And third, if you're supplying anything, goods or services, to a unit in a special economic zone or an SEZ. All three of these fall under the LUT umbrella. Okay, so it sounds great, right? The big question is, who gets to use it? Can your business file for an LUT? Let's take a look at the eligibility.
And this is the best part. It's incredibly simple. There are really just two main conditions. One, you have to be registered under GST. That's a given. And two, you can't have been prosecuted for tax evasion where the amount was 2.5 crore rupees or more. That's it. If you meet those two simple criteria, you are good to go.
All right, let's get into the practical side of things. You're eligible, you're ready to go. So how in the world do you actually file this thing online? The whole process is right there on the GST portal, and here's the exact path you need to follow. Once you're logged in, you just click on Services. From there, go to User Services, and then you'll see the option for Furnish Letter of Undertaking, LUT. It's really just a simple 4-click journey to get to the right page. Now, a little pro tip. Before you even log in, it's a good idea to have a couple of things handy. First, make sure you know the financial year you're filing for. Second, you're going to need the details for 2 independent witnesses, just their name, address, and occupation. And finally, you'll just need to read and accept the self-declaration conditions on the form by checking a few boxes. Simple as that. And the last step is actually signing it. So who can do that? Well, it can be the primary authorized signatory, the proprietor, a managing director, or a working partner. And you've got 2 ways to sign it electronically. Either with a digital signature certificate, your DSC, or with an electronic verification code, the EVC, which is usually sent to your Aadhaar-linked mobile number.
So, you've filled it all out, you've signed it, and you've hit that submit button. What happens next? Let's talk about tracking your application and what to expect. The great thing is, you get instant confirmation. As soon as you submit successfully, the system fires off a few things. You get an application reference number, or ARN. That's your tracking number. You also get a PDF acknowledgement you can download for your records. And on top of that, you'll get a confirmation by both SMS and email, so you know right away that it's in the system.
Now, as you track it, your application will have a status. It could be submitted or approved, which is great. But the one I really want you to pay attention to is deemed approved. This one is a bit of a secret weapon for exporters, and you're about to see why.
And here it is. This is the single most important rule to know. The system is designed to be fast. If a tax officer doesn't take any action on your application within just 3 working days, it gets automatically deemed approved. This is fantastic because it means your business can't get held up by bureaucratic delays. Okay,
We're almost there. Before we wrap up, let's just go over a few crucial rules, some edge cases, to make sure you've got this process completely mastered.
Now, this one is super important, so listen up. If your business gets a new GSTN for any reason at all, maybe because of an administrative change, like when the Union Territory of Ladakh was formed or when Dominant Du merged, your old LUT is no longer valid. You absolutely must file a fresh LUT under that new GSTN.
So let's just quickly recap the big takeaways. Number 1, the LUT is your ticket to exporting without paying IGST upfront, freeing up your cash flow. Number 2, you've got to file a new one every single financial year. 3, the online process is easy and that 3-day auto-approval feature is your best friend. And finally, number 4, a new GSTN always means a new LUT.
And there you have it. You are now equipped to handle the letter of undertaking for this financial year. And that really brings up a bigger question, doesn't it? With this piece of your compliance puzzle now in place, what's the next step you're going to take to optimize your entire export operation? Something to think about. Thanks for joining me today.